Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from Mainnet 2023 in New York City. Joining me for this segment, we have Kell Canty, who's the CEO of Ledgible, to discuss the wave of new regulations for financial reporting of digital assets. It is great to have you with us, Kell. Welcome to TradeTalks.
Thank you, Jill. Glad to be here and great to be talking about the new regulations coming down and what it means.
Yeah, well, you know, I would say overall, a big theme that we're talking about here is getting some sort of framework, some sort of clarity. So at least getting this framework in terms of reporting, it sounds like it's a positive move forward.
It really is, and it comes from multiple agencies. If you look at the Financial Accounting Stability Board and what they're doing, and we can talk a little bit more in detail about that, as well as what the IRS has done. They dropped 282 pages of regulations just a little while ago, and then also a month or two ago, they also clarified some things around DeFi and staking, and that's really crucial that everybody knows the rules of the road and that we know how to report these things and be compliant going forward.
What are some of the more significant changes that stands out to you?
So one is that staking counts definitively as income. That's a new way of earning income within the blockchain and DeFi community, and it's clear now that that is actually required. One of the other ones that's really huge is something that came about with the Infrastructure Act. It required that broker-dealers that are enabling digital assets, such as NFTs or Bitcoin or anything of that nature, to come through, that they give tax reporting information to their clients and to the IRS and the government, so that it can all be done very easily, just like if you had a regular brokerage account. That will greatly accelerate the ability for people to do their reports and their taxes in a compliant way.
So essentially, clients weren't reporting to the IRS. There was just no framework or forms to give them. Will it be retroactive at all? It was
called self-reporting, and it still is going to take a couple of years to go through the industry, just like it did with traditional assets.
Right.
So we haven't always had this for traditional assets, and we haven't had this for crypto assets. And so some people have said we didn't know that we needed to report it. We never got anything, because they're used to the ability to bring in a 1099 and say, okay, I'm filing this, it says it should have been withheld, all of that. You had to do it all on your own. People were either unaware or, quite frankly, it's very difficult to do.
It is incredibly difficult to do. It's almost written like stereo instructions, and it made it very challenging. Are there any differences in terms of how digital asset reporting will look relative to equity reporting or traditional assets, if you will?
There's going to be more complexity there, because when you have the easy ability, as crypto gives you, which is a huge benefit, to move an asset from one place to the other. You can have it in your Ledger wallet sitting there in your pocket, or you could have it at an exchange, say like a Coinbase or a Gemini. You can move that or parts of that to wherever you want at any given time, or make a payment and buy something for it. So the ability to bring all that data together from those different places and put it together in one place and know the tax ramifications of it is really a differentiator between crypto and the other traditional assets. You wouldn't think of buying a car with Apple stock, yet a lot of cars have been bought with crypto.
Yeah. Now the FASB, that's going to drastically impact the public company side.
It will. There has been a lot of curiosity. In fact, some of the public companies, Tesla sold off some of their Bitcoin because they didn't want to necessarily deal with that. The way it was is as an intangible asset, and this is some deep accounting methodology here, would make you say if the value went down, we're going to put it on our books at the lower value. But then if the value went up again, you couldn't bring your books back up to that amount that it was in until you finally sold it. So it would be artificially depressing the price of that asset because they had no other category for it. Now they're saying that for the majority of the mature assets in crypto, that it's mark-to-market or fair market value, meaning that you can actually just, whatever is the market for it and the fair market price, that's what you put on your books. The other way was really confusing, particularly if you were an investor in a public company, say MicroStrategy or Coinbase or one of the mining companies, and you're looking at all these values and saying, wait, I thought they had more Bitcoin than that, or why is their Bitcoin only valued at, say, 15,000 when right now it's trading at 25,000? It didn't really make sense that they could only get the full value realization when they sold it, but that's how it's treated under intangibles. So clarifying that is really going to be a great service for the investors in public companies that have crypto assets, as well as the companies themselves.
Should we get a regulatory framework from the SEC, CFTC, whoever ends up regulating this. Do you think that could impact the accounting side of it?
I think what is going on right now between the FASB and IRS, as well as some great organizations such as AICPA, are getting us there. You may be aware of this new regulation over the entire EU called MiCA, Markets in Crypto Assets, and that is really a clarifying, great movement. We've seen some companies say they're leaving the United States to go over to Europe for that. And unfortunately, I think right now that's going to have to come from our legislature, and we're now firmly in a presidential cycle, which given the closeness of the two different parties, we already had a little bit of a gridlock there, and now it's going to be further side. I don't know that we're going to get clarity from legislation, which we're going to be one of the last countries in the world to have that until after the presidential election.
Well, I mean, the downfall or challenge to that is we're not necessarily in the thick of it. We're the first ones kind of building the ecosystem. We'll be coming in towards the end of it, and it's not necessarily how the financial system has operated until then. And I mean, it's kind of clear the trend is moving to a digital asset economy, and it's happening in other parts of the world where there was no traditional banking, and this is the way that they are building local economies and transacting business. I mean, it could be a mark against us if we don't have a framework.
I say it is, and people talk about, well, maybe it's detrimental to the value of the US dollar across the world. The dollar has shrank to about 66% impact, and you now see oil trading in other currencies, which didn't happen 10 or 15 years ago. So the dollar is already losing a little bit of strength globally, and the way that you, I think, approach that, if you see something that could strengthen the dollar, or even maybe is questionable, you bring it in, you give it a bear hug, you adopt it, you make the United States kind of an incubator for it, so you help guide it the way we did with the internet. You know, the United States became an even greater tech giant by actually passing several legislations around taxation or freedom to comment and not be treated for liability purposes for social media and things of that nature that really caused the internet to be housed here, the standards to be grown from here, and it's worked out very well. I think we should do the same thing with digital assets.
Yeah, I mean, even when it comes to content moderation, to your point, Section 230, which we know needs some updates. I mean, they have the the DSA that they're implementing in the EU, so it's like they have the framework there also. Before we let you go here, Ledgible, where do you fit in this ecosystem?
So at Ledgible, we've always looked at the issue of how do we further adoption of digital assets. We started earlier on with crypto assets and helping companies and professional CPAs do work with those assets so that if you have a high technology asset such as this, you can get clear, concise, accurate reporting from CPAs. We partner with Thomson Reuters throughout the world, and also we deal with the new digital assets that are coming out in the form of tokenization of real world assets. So we are helping actually bring that and bridge crypto and blockchain and digital assets into traditional financial reporting and tax so you can be compliant for that.
All right, we appreciate the insight, Kell. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.